Welcome to the Goldstein on Gelt show. I'm Doug Goldstein, the host. I'm very excited here to be talking to my friend Alan Pfeister, who is a U.S. accountant, but interestingly, he specializes in working with people outside the United States. So in my day job at Profile Investments, I, of course, living outside the U.S. as well, have found a special niche of working with people who are U.S. expats. But the interesting thing about it is that a lot of times U.S. expats don't realize that there's something different about them and something special about them. So I'm very happy to have you here. Tell me, what is it that makes, or if you could tell every U.S. expat what he or she needs to know about taxes, what would you want to tell them?
Well, the first thing I would say is, just because you're out of the United States doesn't mean you're out of the tax system. It doesn't mean you don't have to file tax returns, which is not the case for a lot of other countries. A lot of other countries, when you're not living there, you're out of their tax system. But as a US citizen, you're going to have to file tax returns whenever you have a minimum amount of income, no matter where you live. Plus, there's a whole other set of rules on top of that regarding certain investments you can make, reporting for bank accounts, and even if you own companies.
So one of the questions that we hear a lot, and I'm sure you've heard it a lot, but and I don't like the question, but I got to bring it up, is people say, well, how are they going to know? How are they going to know?
Well, that's a really good question because, you hear there's so much stuff on the internet and you don't know what to believe and what not to believe. And I see a lot of things about US tax on the internet that I don't think people are just being mischievous when they give the wrong information. I just think it's so complicated that they just don't really understand it. So, a couple of times a month, I always get emails or calls from somebody saying, hey, I've been living overseas for a long time. I've never filed a tax return. Do I really need to do that? So one thing I like not to do is to start quoting a code and say, yeah, look at section 61, blah, 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 regulation is. But I say, hey, look, if you want to know for sure, pull out your passport, look through it. I've got a newer passport I just renewed, and on page 7, one of the many things that says, it clearly says if you live abroad, you have to continue filing your taxes and reporting your income. So it's right there in your passport.
Okay, I got
2 sentences.
I got to check out my passport when I get home to take a look. It's actually funny you say that because I got a panicky call from a woman recently, a couple of weeks ago, actually, and not a client, right? She knows me from the newspaper, and she said, and she called on our after hours emergency number, which frankly no one ever calls on because I don't have that many emergencies. So I said, what's up? She goes, well, I just got a letter that I can't renew my passport because I haven't paid my taxes. What should I do? So I said, well, maybe you should pay your taxes.
Yeah, that can happen. That can happen. They create a statutory return. You can't change it once they do that. They assess you about, tax bill. It starts at 54,000 plus when they pull your passport.
Oh my God.
And you don't.
Wait, sorry, I want to clarify that. It's a $54,000 fine if they pull your passport?
Oh no, it's once the taxes that you owe get over $54,000. That's when they basically shut off your passport. So if you owe the IRS money, even if it's $1, they're going to keep track of this. They'll send you automated letters forever. They're never going to forget about any money you owe. But it's once it reaches that certain threshold, and you might not actually owe that amount of tax, because what they can do is, if you haven't filed and they think you need to file a return, they send you a bunch of letters and you don't respond. Maybe you don't get the mail because you don't live there anymore. But then they create what's called a statutory return. And they're able to do this by statute. And they're not allowed to claim certain credits or tax benefits for you by law. So they create this tax return for you, and it's a whopper of a tax bill. And they'll pull information that they had from whatever source, and that's it. That's your tax return. That's the tax that you owe. So it's not too hard to get up to that $54,000 if you haven't filed for a few years.
Wow. And also, I think the other answer is, how are they going to know? It doesn't matter how they're going to know. There are a lot of crimes that people do or could do that maybe someone's not going to find out, but that's not the reason that you should go ahead and do the crime. And if there's a law and you're a U.S. citizen, then it's something you have to take seriously. There are obligations. And the U.S. taxes people on worldwide income.
Yeah, absolutely. Worldwide income. Doesn't matter where you earn it. It could be in a foreign country. It could be in the International Space Station. It could be anywhere. Maybe Mars. I assume Mars if somebody starts working there one day. Anywhere.
Yeah, I guess they'll find you, right? That's for sure.
Yeah.
But one of the things that people often quote is they go, well, it's foreign, or I have, and they refer to something which I think they don't know what it means, which is the Foreign Earned Income Exclusion. Could you explain what that is?
Yeah, absolutely. It's one of the two main tax benefits for Americans that are living and working overseas. So the foreign earned income exclusion is for salary and wages, things you earn as an employee, but also profits you earn as a self-employed person, you're running your own business. So there's a certain amount that you can just exclude from being taxed altogether. And that amount currently for 2024 is $126,500. Now
So just to be clear, that's work income. So if you have a job or you're self-employed, the first $126,500, do you have to report it, or you just don't even mention?
Oh yeah, you report it. So you add it and then you subtract it and it nets to zero. They still want that information. They still want to see that you earn that money, but then they allow you to fill out form 2555 and then subtract it.
I think one of the key terms in that foreign earned income exclusion is the word earned income. So how does that work out? Because most of the people I talk to, frankly, are retired. My day job is working with people in Israel. Generally, they're retired. Why? Because those are the people who usually have the money. So they're not working. They don't have what we would refer to as earned income. They have passive income. Can you describe the difference and how the taxes would look different from a U.S. standpoint?
Yeah, absolutely. So passive income like that from retirees, that doesn't qualify. So one of the other tax benefits that's the most commonly used for retirees or anyone is called the foreign tax credit. So the idea is if you're in Israel, for example, and you have a rental property and you elect to pay the 30% of gross tax, for example, then you can claim that 30% tax paid as a direct reduction for that income on your US tax return. So the idea is whatever you pay to Israel or whatever country you're in, you use that to reduce your US tax bill for that specific category of income, be it rental or dividends, or even if you're working, if you have a salary and you're paying tax to a different government, you can also use the foreign tax credit method as well. It prevents double taxation.
So in general, do you find that people don't suffer from double taxation?
Well, it really depends on where they live and what the tax rates are. So I happen to work with, yeah, well, yeah, I mean, no, probably not because of these tax breaks, the foreign tax credit and the foreign earned income exclusion. If they're in very low tax countries, well, then, yeah, typically you can get hit with the tax bill. Like if you're living in a Caribbean island with, no income tax, then Uncle Sam still wants their cut.
Got it. But if you've already paid to a country with whom the United States has a tax treaty, so then the odds are you're not going to be paying double tax on the same income.
Oh, well, not exactly. There doesn't have to be a tax treaty. The foreign tax credit is allowed by statute. It's available for basically all countries. I mean, there's a couple of exceptions.
Right.
Like
so
if you're paying
to
tax
Goldstein
to
on Gelt show.
yeah, like I mean, if you're paying tax to like North Korea or Syria or one of these embargo countries, they won't allow it. But that's kind of the rare exception. In Israel, there is that tax treaty, and there are benefits to that. But for the foreign tax credit, you don't need to use the treaty at all. You just get it by law.
Other terms that people throw around, and sometimes they don't really understand what they're talking about, or they've heard them and then they worry about them, or things, for example, the two big ones are FBAR and FATCA. And I note that FATCA is spelled FATCA, and if you just put another T at the end, it's like fat cat. And the joke is it was designed because everyone in America, all the legislatures, thinks that Americans who move overseas, they're all fat cats. They're just hiding their money overseas because then they're doing something illegal, which is just really, really not true, at least from my experience, knowing lots and lots of American expats. And frankly, I feel this is sort of an unfair name that they get called. But can you just describe what these are and how American expats should relate to them?
Yeah, sure. I mean, I agree with you completely. I mean, most people are just living their lives. They're just somewhere else for whatever reason. In fact, they're terrified of the US government for not filling out one piece of paper, not sending that form that they need to do. Because the penalties for this are really outrageous. They're not geared to the big tax cheats, which should be penalized. They're geared towards everyone. Like I say, it's like going fishing, but you're using dynamite. You're getting everything in the water, even the small fish. It's ridiculous. So the FATCA and the FBAR are very similar. So, what are these acronyms? What do they mean? Basically, they mean if you have foreign accounts, like a bank account, certain retirement accounts, investment accounts, even certain insurance policies with a cash surrender value, then you simply have to report these. That's all you do. You don't have to pay any additional tax to the government or any additional fees, but the penalties are pretty high. They generally start out at $10,000 per year and can quickly go up. So what do you do? What do you report? Like I said, it's all of your bank accounts, your investment accounts, and etc. And you base it on the highest balance in the account per year, and you look at all of your accounts and you add it up. So
That's interesting you say that. So one of the mistakes I think people sometimes make is, let's say they're buying a house for $1 million. They keep their money in a brokerage account in America, and they wire the $1 million over to Israel to buy the house. It sits in the bank for a month or so until they close on the house, and then they send the money out. So now their bank account has $20,000. They think, nothing to report. The money was only in and out. What do they have to report on their FBAR for that year?
Oh, they have to report the $1 million. They have to report the highest balance. And in fact, you don't even really, for the FBAR, it's 10,000. For the FATCA reports, it's a lot higher. But you don't actually.
Sorry, when you say 10,000, you mean the penalty?
Well, no, that's the reporting threshold to report all of your accounts. So let me just give you a quick example, an easy example of how convoluted these rules are. So let's say you had two different accounts in Israel, and the highest balance was $4,000 in one and 4,000 in the other on June 30th. So $8,000, right? That's under the 10,000. You don't have to report. But say you get $1,000 in the first account for whatever reason, right? And then that afternoon you transfer $1,000 over to the other account. So in total, you only had $9,000. But the highest balance in the first account was 5,000, and the highest balance in the second account was 5,000. Now you have to report it.
Wow. Okay, I can see people can get quite messed up with this. So it's interesting how you. I mean, there are a lot of details with this. The clients and the accountants that we talk to are always getting very involved in the details. Just tell me your background. How did you first touch base with the issues that U.S. expats had?
Oh, well, I was living in South Korea. I had just moved. I was over there as a university professor with Southern New Hampshire University. It was the only CPA preparation bachelor's degree in all of South Korea at the time. So it's great. I love doing that. And I had a friend come to me. It was my first year. I had a friend come to me, and she'd been there for years. And she said, "Hey, I haven't filed my tax returns. In years, can you help me out?" And at that time I'd only done audit and tax work. I hadn't really done, audit and accounting work. I haven't really done tax work. And to be honest, at that time I didn't even know I had to file a tax return.
Whoops.
Right. So it was kind of educational. So later on she came to me and says, "Hey, look, I got a couple of friends. They're in the same situation. They haven't filed for years." Did a little research. I found out that there's an amnesty program. There still is. It's called a streamlined filing program that really helps you get right. You just file for the past years and everything else is forgiven as long as you pay your tax.
Wow. Yeah, well, I guess it's a personal way to get involved. That's similarly to me. When I started on Wall Street, I worked in the Twin Towers actually at the time. May they rest in peace. So for me, moving to Israel was clearly a good move. And then when I moved here, I was doing the same thing. I was working with Americans who lived in Israel who had US accounts. And over time, the whole actually the legislation in Israel related to investing changed a lot over times, and the taxes changed a lot over times. And keeping up with that is a real expertise. You really just, it's not just, oh, I can work with any American accountant and he can help me out, because these days I'll see people who move to Israel who keep their US accountant, who may be a nice guy and he may really understand taxes, but he doesn't understand what it means to be a cross-border tax advisor. And that's what really messes people up.
Oh yeah, there's a lot of tax professionals out there, great ones, that just aren't familiar with the set of international rules, and it's common. Because if you think about it, there's about 320 million people in the United States, and there's no official number of the number of Americans living outside. About 8 to 12 million is sort of the guess.
Yeah. Right. Interesting. Well, listen, it's fascinating. It's clear to me that you've really you spent years building your knowledge base on this. How many years have you been in the business?
Oh, about 11 years now. Yeah, wow. It's been quite a journey. It's taken a lot of time. A big part of it too is just what I call client education. People don't realize, they're scared. They haven't filed for years. They're worried they're going to go to the airport and get arrested. And, that's generally not the case, but you got to get everything sorted, because once the IRS gets on your case, they're not going to just forget about it. They're going to see it through until it's settled to their satisfaction.
And you can help people to get all this in order?
Oh, yeah. Yeah. I mean, I get calls all the time. It's, as long as you're proactive and, the IRS hasn't started auditing you, you get to the first. If you're audited, the IRS always has this very negative view, especially overseas, right? You're a fat cat. You're trying to cheat the government. It's a very obvious bias if you work in an industry like I do. You get to them before they get to you, and they tend to be very forgiving and very understanding. They have this very long-running program called the Streamlined Filing Program. You basically just get caught up with the last recent years. And as long as you keep filing as you're supposed to in the future, all is good within the graces of the IRS.
Right. That's very important. All right. So Alan, listen, in the last minute, just tell me, how can people get in touch with you if they'd like to learn more about your services?
Oh, yeah, sure. Just go ahead and send me an email anytime. My email address is allen@allenp.cpa. That's ALLEN @ALLENP.cpa. Even if you have a quick question or two, or if you know someone that has just a few questions, just send me an email. I mean, my whole philosophy is just really help relieve all the stress, tension, and anxiety from our overly complex tax system, and I'm glad to help.
And it is certainly complex, and it's good to know that there are people out there who can help you to relieve your stress. Alan Pfeister, thank you very much for taking the time here on the Goldstein on Gelt show. If anyone has any questions, please feel free to contact Alan by email. His email is in the show notes. And thanks so much to my producer, Joseph Goldstein, to my chief engineer, Steve Stewart. And thank you very much for taking the time to listen to the Goldstein on Gelt show, the financial show for people living in Israel. See you next time.
Bye. Thank you.